Hey traders, welcome back to Muli. Today we are exposing 5 deadly mistakes traders make when using Fibonacci retracements and how you can avoid them. Let's dive in. And the first mistake is forcing Fibonacci on the wrong trend. Like in this case, between this line and this line, you can see that the market has no clear direction. So drawing a Fib level in this level, this area is choppy and you cannot make the right decision and you will end up losing your trade. So it's good for you to draw the Fibonacci levels in an uptrend or a downtrend. So avoid that trade so that you may stop losing up your trades. The mistake number 2 that most traders are doing is drawing it backwards. The moment you draw the Fibonacci levels in backwards, you'll end up messing everything. Like in this case, we can see the market is on an uptrend in this zone. So if you want to draw the level, avoid using this one. Like you see, it's an uptrend, but I'm drawing it backward. Instead, while drawing the levels for an uptrend, draw from the swing low to swing high so that you may not end up messing everything. Also, if you are drawing on a downtrend, always draw from the swing high to swing low, and by that you will be able to catch the best trades ever. You see, you will be able to catch the best trades ever. The mistake number 3, and it's costing so many traders, is ignoring the confluence. You should always know that 61.8% is not a magic by itself. You should look for confirmations like maybe trend lines, support and resistances, candlestick patterns, or even moving averages to make informed decisions about your trades. And by doing this, you will be able to get quality trades that will not mess your capital. And mistake number 4 is using all Fibonacci levels. In my previous video, I shown you how to customize your Fibonacci in order to remain with only the most important levels, that is 61.8 and 50.00%. The last mistake that most traders are doing is not setting a stop loss. Guys, you should know that Fibonacci strategy is not a holy grail and it has its own setback. So the moment you enter in a trade, be sure to set your exit in case the market goes against you. Like in this case, you should always put a stop loss slightly below the 61.8% to secure your capital, and by doing so you will protect your capital and avoid losing a lot of your money. And so guys, if this is something that has interested you, kindly like and subscribe. Thank you.